Hi everyone, this is Ted Bauman of the Bauman Letter of Banyan Hill Publishing. I want to talk a little bit today about the Lyft IPO, which is something that a lot of people have been talking about. It kind of took over from the inverted yield curve as the big news story of the week. I want to talk about Lyft in the context of whether or not you should be investing in it, because I think that's really the big question everybody's asking. Now, I want to make 3 points. The first one is that IPO really stands for it's probably overpriced. Lyft launched at $88.60 on Friday. Right now it's trading at under $69. That's a 20% drop in one day, and that's common. That's pretty typical of IPOs. And I think the critical thing to remember is that IPOs are not really designed for retail investors like you and me, and I'll get to that in a minute. Now let's think about a previous example of an IPO, a Snapchat that listed at $27 in March 2017. Well, Snapchat now sells for under $12. That's a 57% drop. And losing that much money is a serious buzzkill. Snapchat is now rated as a strong sell with a 20% downside for this year. So I think that's the critical thing to bear in mind, that you can really lose a lot of money on these things. The second point I want to make is that these are not really rideshare app companies anymore. We know these companies to the extent that we do based on what they have been doing historically, and that is, basically creating platforms for people to call privately owned cars and drivers to take them from point A to point B. So they've essentially destroyed the taxi industry in every city where they operate. But that's not what they're going to be competing on in the future. It's not like there are other companies who are going to come in and start doing rideshare apps in their markets. Instead, these companies are competing in the future on the basis of autonomous vehicles. If they have any kind of a future, a profitable future at all, it's going to be through autonomous vehicles and through developing that and becoming the market leaders in that. But let's look at their position, their ability to be able to do that. Lyft lost almost $1 billion last year. Uber lost almost $2 billion last year. Now, at the same time that these guys are losing enormous amounts of money, right, which had been fed to them by venture capitalists, they're planning to move into all kinds of new things. Both of them have moved into e-scooters and e-bicycles. Uber is trying to move into food delivery, freight, autonomous driving cars. And even Uber has got the idea that they want to build a flying car. Now, the big question is, do they have the cash reserves to do this? Remember, the whole point of this IPO, what they keep telling us is these companies are going to make money in the future because they have potential. But their potential is not the ride sharing, it's the autonomous cars. And if they cannot compete in the autonomous car space, then they have no future, and therefore their stock valuations are meaningless. Look at what their competitors are. Google alone, big in the autonomous cars sector, has $109 billion worth of cash. $109 billion, right? Now, Uber hopes to raise $120 million through their IPO. They might, all right? Lyft raised about $22 billion. That's not anywhere near enough to be able to compete with Google. Google has much deeper pockets. So my point is that if you stop thinking about these companies as ride-sharing app companies and start thinking of them as companies that are angling towards a future market in autonomous vehicles, there's no reason to think that they're going to be the winners. And as a result, their stock prices cannot sustain where they are right now. The third part, and I think this is the most important one when it comes to IPOs, is that IPOs don't always mean that the party is getting started. Sometimes IPOs mean that the party is actually ending, right? Now, 2019 may be one of the biggest years for IPOs that we've seen in a while. It's probably going to be double the yearly average for IPOs since 1999. Now, what we've seen historically is that IPO peaks tend to happen just before recessions, just before the stock market crashes. And that happens for two reasons. One is that I think IPOs tend to happen when existing investors are kind of itching to get their money back. In other words, the venture capitalists who have put the money up to get these companies off the ground, they want their money back. And the way they can do that is by an IPO, and they sell the shares that they own into the market and they get their money back. They've basically captured it all. So they get their money back on the day of the IPO or shortly thereafter. The rest of us buy this stuff and then watch the price of the stock deteriorate. Now, One of the reasons they may want to do this is just to get their money back. The other reason could be because these venture capitalists realize that this is probably the highest valuation they're going to get before a slump happens. And if that's the case, you're basically being a sucker to buy this kind of stock at this point. Remember, IPOs happen when initial venture capital investors want to take their profits, and they take them from you, because you're the ones who buy those stocks off their hands at elevated prices. So my advice is don't buy Lyft right now, don't buy Uber right now. Wait and see what these companies can make of themselves over the next year or two. If they turn out to have something that we don't expect, something that they can actually turn into a big profit-making market that nobody else has at the moment, then all power to them. But I don't see that happening, as I said, because of the competition that they face. Anyway, this is Ted Bauman from the Bauman Letter. Make sure to look at my social media pages. I'm on Facebook, I'm on Twitter. I now have a new YouTube channel of my own. And I've been increasingly being quoted in the press. I've been in Barron's, I've been in Forbes, I've been in The Guardian. I've been in quite a few publications recently. So make sure you look for me there too. Signing off, I'll talk to you soon. Bye-bye.